Hello and welcome to yet another episode of State of the Economy. Now, as India gets ready for its tryst with destiny, what is the foundation that Budget 2017 will address? Will there be an overhang of demonetization? Will the government focus on boosting consumption and not just kickstarting investment? And will the government continue to be fixated with the fisc, or will it give into fiscal slippage and expansion this time around in quest of growth? Many questions to discuss over the next half an hour. I've got two very special guests, Professor Bibek Debroy, member Niti, Aayog, and Dr. Rakesh Mohan, former Deputy Governor of the RBI. Professor Debroy, because you represent the government in many ways, more than one, I'm going to start with you. And I'm tempted to start with demonetization, but I'm going to take a break from the discourse and ask you about how transformational do you expect this budget to be? Because this is for the very first time, and not many people are talking about that the known and the non-planned expenditure, the distinction will go away. The railways budget is going to be merged with the union budget. And of course, this budget will perhaps herald the change of the financial year. So in that sense, it's going to be transformational. What is your big expectation then?
It's an extremely important budget precisely because of the reasons that you mentioned, that A, the planned versus non-planned distinction is going to go. B, the railway budget as we have known it is going to change. C, you mentioned the change in the financial year. That's not going to happen this year because there's a committee that has submitted a recommendation, but it will happen somewhere down the line, presumably. And that's one of the reasons why the budget has been brought forward a little bit. But perhaps there's something else I want to flag, which is that this is the first year when the ramifications of these, including the recommendations on the new centrally sponsored schemes, are going to feed into the state government budgets. So the attention should not only be fixed on what's going to happen on the 1st of February, but increasingly the state government budgets as well.
That's a very valid point indeed, that the state government's budget need to be looked at not just for their finances but also for their deficit positions. But Professor Debroy, let me just continue with you, because this budget, and like I said, I was going to take a break from the discourse, but I'm going to go back to what is really public discourse, top of mind right now, demonetization. Seldom has an event dominated the budget unlike this one. Considering it's coming in the backdrop of demonetization, in that context, what's your expectation?
Well, I'd say that what happened on the 8th of November is part of a broader institutional cleaning up that's happening. And the budget, which is only one particular instrument that the government has at its disposal, also needs to be viewed against that. Because fundamentally the budget, apart from whatever policy direction it imparts, is an annual statement of the union government's revenue and expenditure. And it's important to appreciate that much of expenditure is exogenous. It's fixed in the short run. There's very little you can do about most items of expenditure in the short run, including expenditure that's in the form of revenue expenditure. So fundamentally, what you do through the budget becomes an exercise depending on what projections you have about revenue. And you mentioned the possible growth slowdown, so that's going to affect revenue this financial year, and more importantly, what are going to be the projections for revenue generation, tax revenue generation in particular, in the next financial year. And therefore the finance minister has to take a call, given that revenue, given the deficit reduction compulsions, on what kinds of expenditure is he going to have, which includes public investments, because the public investments are often necessary to trigger private sector investment. So that's the broad backdrop of the budget. And also in passing, there is an issue of the extent to which tax reforms are pushed. I don't mean just the GST, partly the GST, but also the direct tax reforms.
You're actually giving me cues to some very specific questions, and I promise to come to all of those in just a bit. But let me just get opening comments from Dr. Rakesh Mohan as well, who is joining us all the way from the US. And Dr. Mohan, what is your expectation? What is your assessment of the state of the economy and the context in which the budget is coming in, which is demonetization? And believe it or not, and we can keep denying it, we can keep justifying it, but it has taken a toll on growth, which has kind of slowed down.
Well, it's a very uncertain time in the world as a whole, as well as in India, as a consequence of demonetization. What I would hope is that the budget, in some sense, goes beyond demonetization and comes back to, in some sense, business as usual, not in terms of not doing anything, but business as usual in the sense that, look, we have to be thinking just beyond demonetization. So I would hope that they concentrate much more on infrastructure than they have in the past. I'm just totally sort of going beyond demonetization. And especially since the railways budget has now been abolished, one would like to hear much more in the main budget on what the plans are for the railways for the coming years, actually, not just for this year. And increasing expenditure railways, expansion of the dedicated freight corridors, etc. Second, I would hope that partly the consequent demonetization, since it was supposed to have been directed towards black money, that there are measures in the tax administration to modernize it and make it more efficient, to be able to trace the income tax evasion that is rampant in the country.
All right. So again, you're leading me to some very specific points, and I'm going to come back to them, whether it's tax, whether it's the railways and the future of it, considering it's going to be merged with the union budget. But let's just get done with growth, because that is what matters a lot. Professor Debroy, I'm not going to get into the semantics of GVA versus the GDP, but what is your broad expectation of the steps that Budget 2017 will have to spur growth? Or unlike a lot of people, you believe that, 2 or 3 quarters don't really matter in the life of a nation, but there's no denying there are scars, and those need to go away. What measures do you think this budget is going to have?
The growth figures I don't want to get into, because all growth figures based on GDP or GVA tend to be somewhat suspect. So let's not get into the precise figures regardless of where they originate from. The broad picture story is, in all probability, in Q3 and Q4 of this financial year, growth will have suffered a little bit, which is supposed to be, or is expected to be, more than compensated by greater growth that comes next financial year. And there are various ways that can come about. Firstly, there is a greater deal of organization across different segments that is going to happen, and I'm not particularly fixated on the 8th of November, because the Real Estate Act has a little bit to do with it. The extending of the tax bait under the GST also has to do with it. The expected organization that's going to happen because of the Digital India initiative, all of these fit into the process. What's pertinent for present purposes is, although we won't have figures until the end of March, there will be a certain amount of money that the Finance Minister has, which goes into the Consolidated Fund of India, particularly through the income declaration scheme, especially the tax and the penalty part. And the question therefore is, to what extent is this going to be used in public investments, of whether it is the transport kind or some other kind, because that is what can be expected to impart an additional growth stimulus.
All right, I get that, but Dr. Rakesh, Mohan, just to take a cue away from growth, and I know we have to spend a considerable amount of time on tax, and I will in just a bit, but will this budget, unlike the ones in the past, be a lot about boosting consumption and not just investment as well?
Well, I would hope that it concentrates more on investment than consumption.
All right, you hope it's going to be more on investment than consumption, but consumption has been delayed, if not killed. Professor Debroy, how does the debate settle between consumption versus investment? Do you believe this budget needs to boost consumption and not just kickstart investment?
I think this is partly an artificial kind of trade-off that is suggested, especially by people who often compare the Chinese story with the Indian story. I would look at it somewhat differently, that consumption means what? Consumption essentially means giving people more tax exemptions. But the broad agenda of tax reform is an end to the exemptions, and end to the exemptions not only on the personal income tax front but also on the corporate tax front. If I'm going to streamline and harmonize tax reform, taxes, that means an end to exemptions. So how on earth am I going to give a consumption stimulus, apart from whatever is going to happen through the pay commission and things like that? So fundamentally, this budget, to my mind, is a trade-off between whether I want to give more tax concessions, fiscal concessions, or whether I want to invest in the roads, the highways, the transport and the railways.
All right, so both of you believe the case for consumption is perhaps not very warranted, but there is a discourse and there is an expectation out there that this has to be about fiscal stimulus. Dr. Mohan, if I may ask you, and I'm just trying to be the devil's advocate here, if the impact of demonetization is going to be transitory as the government claims it will be, then why this whole talk, even from certain quarters of the government, of a stimulus at all? Because one will be overloading demand when it is perhaps going to, in any case, pick up in the second half of next year and perhaps add pressure on prices, be inflationary.
Given the kind of noises that the new President Trump has already made in terms of US protectionism, that we do need to concentrate much more on the domestic economy in terms of boosting investment growth rates so that we do have more assurance of long-term and sustainable growth.
I think you alluded to this in your previous answer, and Professor Debroy alluded to this in terms of tax breaks. But let's just ask you a very direct question and on direct taxes, because it impacts us all. Do you believe the government has elbow room to tweak the 1997 tax rates? Perhaps they have elbow room to, increase the slab on tax exemption, the tax exemption slab. But do they have the elbow room to tweak tax rates per se?
I think the government must be very careful in reducing tax rates. I believe that a 30% maximum marginal income tax rate is very fair. You don't gain very much by reducing that. So I don't think there's much need for reducing tax rates. Also, I think that the practice of increasing the tax exemption limit should also stop, because what you want is people to get used to paying taxes as soon as they get a certain level of income, even as very small taxes. Because once you get into the net and once you get into the habit and once you think it's normal to pay taxes, you'll have much better compliance in the future. On the corporate tax, once again, I think that there are a lot of noises on reducing the corporate tax. Of course, the Finance Minister himself announced in his first budget that he would be reducing the corporate tax rates towards 25%. I think that that's fine, but nonetheless, one has to be very careful with reducing the corporate tax rate as long as they are compensating reductions, the exemptions, which is what he announced. So one would like to, that if he reduces the corporate tax rate, one would like to see which exemptions is he removing, so that the tax revenue does not suffer.
And revenue receipts have to be up for the government to meet its fiscal deficit target, and that's another discussion that we're going to have a little later in the show. But Professor Bibek Debroy, because there is so much of talk on direct taxes, and many people believe, having done demonetization and having made people stand in queues, perhaps lowering their tax rates is going to be the next big thing that the government will do. Do you believe that's a realistic expectation at this stage?
Well, let me state two things. Firstly, what has already been almost pre-announced is a reduction in the corporate tax rate. What many people seem to forget is that part of that same sentence in that budget speech linked corporate tax rate reduction to removal of exemptions. So the two go hand in hand. You cannot have a reduction in the corporate tax rate, the peak corporate tax rate, to 25% without ending the exemptions. I also personally feel that if the corporate tax rate is reduced, you cannot but reduce the personal income tax rate, because at a certain level the distinction between personal income and an enterprise's income can become somewhat artificial. So the two have to be aligned. But in both cases, I would say that the rate reduction is contingent on exemption removal. Without removing the exemptions, there is no case for reducing the tax rates, the peak tax rates.
Let's just focus on the indirect tax rates, and that's a done deal, it seems. As far as the GST is concerned, most thorny issues have been ironed out. What is your expectation, Professor Debroy, as far as rationalization of threshold levels are concerned? Is it fair to assume that there will be a spike in service tax rates, there will be rationalization of threshold levels, so that these rates catch up with when the GST kicks in, which it perhaps will in this year itself?
You're specifically asking that about the indirect taxes.
That's right.
Now, about the indirect taxes, look, we don't really know what the revenue neutral GST rate is going to be. That will be determined by the GST Council in due course. But there is no way that GST neutral rate can be less than 16%, perhaps even 18%. That being the case, there is a case for hiking the service sector rates and moving them upwards so that they converge to the anticipated GST revenue neutral rate. In similar fashion, there is a case for bringing down the taxes on some manufactured items that are higher, which incidentally also indirectly leads to the kind of consumption stimulus, not aggregate but sector-wise, of the kind that you mentioned. So there is this convergence that can happen in anticipation of the GST, and also the GST will be subject to a certain threshold which we still don't know, but anticipating the threshold, one can move up the threshold for indirect taxes to align it with what is likely to be the GST threshold.
All right, so you believe there will be rationalization of the threshold levels. Dr. Rakesh, Mohan, do you share a similar sentiment as well, that this budget itself will see rates go up to catch up with what will perhaps be the revenue neutral rate in the GST?
I'm afraid I've not kept close track of the GST Council deliberations, but yes, obviously maybe the budget is the relevant vehicle to clarify what would be the threshold levels in the GST.
All right, while at taxes, Professor Debroy, I think just a couple of weeks back, the Prime Minister made a case for the markets contributing more to the nation's welfare, almost hinting there that markets should be taxed. And then, of course, there was mayhem and the Finance Ministry had to step in and they said no question of LTCG being reintroduced. But do you believe there is a case for taxing Indian markets right now?
I will interpret it a little bit differently. Firstly, I'm not very sure whether you're alluding to capital gains taxation or not. My view on capital gains taxation is that we should cease to think of taxing capital gains in terms of silos. To me, conceptually, whether the capital gains are from the capital market, whether they are from the land market, they should be taxed in exactly the same kind of way. The terminal goal of tax reform, and we are long way from that, so please do not misinterpret my statement, is, I believe, that it is income fundamentally which should be taxed in whatever form. Once we get to that terminal goal of taxing income in whatever form, then we should cease to tax transactions. But that is purely my personal view and as a terminal goal. Please do not interpret it as suggesting that the government is contemplating anything like that, because we are a long way away from that terminal goal of desired taxes.
All right, so we're a long way away, but you do believe there is a case for taxing Indian markets. Dr. Rakesh, Mohan, I'm sure you're in touch with a lot of FIIs who've got the skin in the game, invested here. There was a lot of mayhem when that hint was even dropped by the Prime Minister. But I mean, the counter argument to that is that India's equity market is still not developed. It's still very nascent, so there is no question. But do you believe there is a case? Do you believe there's rationale in that argument at all?
I think there would have to be very careful consideration of that. Given the current state of the economy, the current state in capital markets, this would probably not be a good time to be thinking of new taxes on the capital market.
Well, probably not a good time. I think the sentiment really is why fix what ain't broke? But we'll take a quick breather on that. We come back and discuss Indian banks, the RBI, and most importantly, the big elephant in the room, fiscal deficit as well. Stay right here with us. So great to be back with you once again on the state of the economy. And let's talk about the fiscal deficit. Should the budget be fixated with consolidating the fisc or postpone that consolidation? And do you believe that can also be read as a sign of weakness and erosion of credibility, Dr. Mohan?
I think that fiscal consolidation is extremely important, especially after the fiscal excesses between 2009 and 2013 or thereabouts. We've just started getting back to a fiscal consolidation path, and the best confidence that the government and the Ministry of Finance can give to the economy as a whole, to investors, both domestic and foreign, is stability in the financial system, stability in the tax system, and some assurance of fiscal stability and fiscal consolidation. So I don't think that fiscal consolidation can be given a go-by at all. The only caveat I have to that is, which again is to do with infrastructure, that there is a great need for expanding public investment infrastructure, particularly the railways and urban infrastructure. And so the only kind of fiscal expansion that I'm in favor of is indeed to do with specific infrastructure expenditures, and consideration can be given to floating special infrastructure bonds whose revenues are clearly earmarked for infrastructure. That I would certainly favor, even perhaps beyond the kind of fiscal deficit target that the finance minister might have. But it must be totally targeted, and it must be very clear. There should be separate infrastructure, government infrastructure bonds, the revenues from which you would then only apply to infrastructure. They would go into a public account and would only be used from it for infrastructure expenditures.
So, Professor Debroy, which side of these two arguments you are on? Because the FRBM panel report, which has of course been submitted, seems to suggest, at least we've given to understand, that some amount of expansion is all right, and you know it's okay to do it if it's in pursuance of growth.
Well, the report is not in the public domain, but you have read what has appeared in the newspapers, and so have I. I think the issue has some bearing on what I mentioned earlier, that the problem really is not so much the fiscal deficit, it is really the revenue deficit, and most items of revenue expenditure are fixed in the short run. If you were to press the so-called pause button on the fiscal deficit, I don't think there would be any cause for alarm, as long as you have a clear stated timeline for further reduction. If you were to just reduce, if you were to avoid reducing it this year and do not have that timeline which is credible, then of course it will be interpreted as a negative signal. However, if you press that so-called pause button and simultaneously say that this is my agenda for fiscal consolidation in the ensuing few years, I don't think the markets would be very jittery about that.
So it's more about the deal and the context of fiscal deficit more than anything else. But quick closing comments then. Dr. Rakesh Mohan, there is some fear that given demonetization, the budget could end up being far more populist than some of you would want to. Is there a concern that you share as well?
I don't have much of a sense of that. I think more of a reason for the possibility of populism could be the upcoming state elections.
All right, so upcoming elections could actually boost some amount of populism, but that may lead to breach of model code of conduct. Professor Debroy, I'll let you have the last word on the show then. Populist versus reformist, how tough is it going to be for the finance minister and the government to walk that very, very thin line on?
Well, sometimes I don't like these labels because I don't really know what the labels mean. What does populist mean? What does reformist mean? Because what is reforms for you may or may not be reforms for me. I do believe that this budget will also spend the extra amount of money that has come in into public investments, into spending on public goods and services which improve the productive potential of the economy in the longer run and are also good for poor people who are often poor because they are deprived of access to these things. Now, do you call that populist? Do you call that reformist? As I said, I think these are mere labels, but I fundamentally believe that this is exactly what this budget is going to do.
We do hope it's going to be a budget that finally balances both India and Bharat and will trade us through what is increasingly becoming a very, very uncertain and a very nasty neighborhood to live in. But thanks very much, Professor Debroy and Dr. Rakesh Mohan, for joining in. Keep it with ET now for everything that you need to know about Budget 2017, because this really is India's tryst with destiny.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.